It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg, just getting headlines from the Fed's latest Beige Book survey of economic conditions. The Beige Book says economic activity was up at a slight to modest pace. Federal Reserve also says the outlooks for future activity, quote, mildly optimistic, and employment mostly unchanged across Fed districts. Fed Beige Book, by the way, gets its name from the cover of the book. Formal name, summary of commentary on current economic conditions. The Dow, the S&P, NASDAQ all lower. Bottom line here, bank stocks dragging us down. We are off session lows. The S&P 500 index down 58 at 69.05. Second day of declines. If that does happen, it'll be the first time this young year that we've had two down days in a row on the S&P back-to-back. S&P down 0.8% again. The Dow down 0.3. NASDAQ Composite Index down 1.4%. NASDAQ 100 Index down 1.5%. And the Russell 2000 Index of small cap shares up 0.3%. 10-year at 4.13%, but the 2-year 3.50%. Gold is up 1.1% at 46.37 the ounce. But the big news, the surge in silver, up almost 7% right now, up 6.8%. An ounce of silver closing in on $93, $92.95 right now for an ounce of silver. Bitcoin up 3.3%, 97,229 on Bitcoin. Some of the other economic news out today, retail sales up in November by the most since July. Mixed picture for a lot of retailers. Macy's shares down now by 2.5%. Target shares, they're up by 1.1%. Walmart down 0.6%. And Amazon right now down by 2%. So again, recapping, stocks lower, S&P down 0.8%. Silver right now up 6.8%, 92.89 the ounce. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As we've been reporting, one of the big stories today, and it's kind of because it's been delayed again, the U.S. Supreme Court did not rule on challenges to President Trump's tariffs. That was for a second time. So we maybe have to wait until next week to learn the fate of his signature economic policy, which again continues to create uncertainty for global CEOs, certainly American CEOs. It's also one of the many things out of the White House that our next guest needs to make sense of. I'm sure he's called on a lot when it comes to all things out of Pennsylvania Avenue. So great to be talking once again, Tim, with Mike Townsend.
He's Managing Director of Legislative and Regulatory Affairs for Charles Schwab. He's a political analyst based in Washington. He's also the host of Schwab's Washington Wise podcast. He did some time on the Hill earlier in his career as well. Mike, good to see you again. Thanks for joining us. We're only a few days into the new year, and already we're talking about Venezuela. We're talking about companies in the U.S. and the president wanting to get that oil out of Venezuela. There's the pushback from the president and the Department of Justice on Fed Chair Jay Powell and the Federal Reserve. A busy few days to start the year?
Yeah, absolutely. Great to see you, Carol and Tim. And I feel like it's been 2 months worth of news in the first 2 weeks of the new year. So definitely trying to keep track of it all. As you talked about at the top of the show, a little bit of a surprise, I think, that the Supreme Court did not rule on the Trump tariffs. That's something that now it's almost like a parlor game here in town. Is it going to be today? Is it going to be today? So I guess we're going to wait until next week and see where that heads.
I mean, is the president creating a good or bad environment for American business? Like, what is it that you keep hearing?
Yeah, I think the hard thing with this president, and I'm not saying this flippantly, but he just says a lot of stuff over the course of any one day, whether that's in speeches where he goes off script or in impromptu news conferences or over social media. There's just a lot to absorb every day, and I think companies are doing a better job. CEOs are doing a better job at maybe not reacting to every little thing, and trying to find where are the places we can work with the administration, to work with the White House, and not sort of overreact to every single pronouncement that comes out, because not every single pronouncement that comes out sort of amounts to anything. So I think that's the trick that is, people are getting better at navigating that.
Well, certainly not apples to apples, but I feel like we're doing the same thing. I mean, there's a lot that comes at us, and I think we're really tasked with trying to determine what really matters to investors longer term. So when it comes to things like capping credit card fees or Venezuela and having oil industry execs there and, talking about investing and recreating and rebuilding the infrastructure in Venezuela. I could just go kind of on and on the tariffs. How do you figure out, with all of that that's dumped on us on a daily basis, what really matters, what we should be focusing on? Maybe it's not the shiny thing, but maybe it's something much more substantial. What are the substantial things that you think corporate CEOs should be keeping an eye on when it comes to this White House?
Well, look, I don't think there's any question that the markets are very, very interested in the Fed independence issue and the situation with Fed Chair Jerome Powell. But even larger than that, obviously, we have a successor to Powell coming up, and potentially other changes to the board. Stephen Myron's term, which is very abbreviated, his term ends at the end of January. So we'll have to see whether he stays on or whether the president appoints someone else to that. But I think the question of Fed independence is absolutely critical for the markets. You've seen what happened over the last few days, maybe kind of come back to the White House and not the way they expected. A lot of pushback from a lot of different people, both
Mike,
here in the U.S. and internationally.
When the president consistently criticizes Fed Chair Jay Powell, that's just bark, or do you think there's bite to it in terms of what he wants in a Fed chair and what he's going to present in a Fed chair?
Yeah, I think he's frustrated. There's no question he's frustrated that he thinks rates should be lower and that he thinks Jay Powell is sort of the driver of that. And I think we're going to get a successor chair from whoever he chooses out of the kind of four finalists, it appears, that we have. I think we'll get someone who is probably at least more interested in doing what the president wants in terms of rates. But I think the thing to remember is that this is a 12-member committee that votes, and the chair is just one vote. So I don't think that putting in a chair that maybe is a little bit of a different mindset than Powell is necessarily going to mean rates are going to go down all of a sudden. So I think that's the important thing to keep in mind, that it is a committee that's going to make a group decision based on the data, and I don't expect dramatic changes no matter who he chooses as chair.
But there are certain things that have to happen between now and then, Mike, and that includes, at least according to Senator Tom Tillis of North Carolina, Republican, the president backing off and the DOJ backing off its legal threats against Fed Chair Jay Powell. Senator Lisa Murkowski supports Senator Tom Tillis' decision to vote against any nominees to the Fed in the Senate Banking Committee in response to that DOJ probe into Jay Powell. So we have to see movement there, it sounds like, before we even see movement for the next Fed chair.
Well, and I think that's right. I think you have to keep in mind, and sometimes I think the president forgets this, but that Congress has a role to play in a lot of these issues. And I think on for example, on another issue, the capping of credit card interest rates, you've seen some pretty high level of skepticism on Capitol Hill. And of course, it's Capitol Hill that will ultimately have to decide how to proceed on that. So I think the Fed chair is another place where whoever he nominates has to go through the Senate Banking Committee, has to get a vote by the full Senate, and they have some ability to hold that up, as Tillis talked about and as others have talked about. So we'll see where the investigation goes. But I venture to say that this has not played out in the way that the White House maybe anticipated it would, and wouldn't be surprised if we saw maybe a little bit of a backing down at some point. We heard in the near future.
Yeah, we heard the word backfire quite a bit over the last couple of days in terms of the way that this has played out.
Yeah, that's what's interesting, right? And we know the president will say things and then he kind of backpedals or comes back, on different issues. But I do wonder how that can be, kind of just prevent executives from making decisions because they either don't want to pop up on the White House's radar or they're just not quite sure what ultimately sticks in terms of policy or oversight from the White House.
Oh, I think there's no question that makes it more difficult. I mean, certainly the tariff situation is a great example of that. Mm-hmm. Are they going to be on? Are they going to be off? Are there going to be refunds? And we're months and months into this debate, and knowing that this court case was coming. So I think that makes things difficult. I think longer term planning is clearly harder, but I think executives are finding a path forward and sort of picking and choosing their battles and trying to communicate with the White House to not just go out out on TV and bash something that the president said, but to find, is there a place of common ground that we can work towards? And I think executives are doing a much better job at that than maybe they were 6 or 8 months ago.
We're talking with Mike Townsend, Managing Director of Legislative and Regulatory Affairs for Charles Schwab. He's in our Bloomberg, Washington, D.C. bureau. Mike, though, when a CEO does speak out, and I think about what happened with the oil executives around the table at the White House and the Exxon CEO who talked about Venezuela being uninvestable and kind of the pushback. I guess this is stupid, naive, but here I go. Why aren't more CEOs speaking up? I think it was kind of shocking to see Jay Powell on a video pushing back. Who'd have thunk? But I do wonder, why are they so fearful of retribution from the White House?
Well, I think it just doesn't benefit, your company to necessarily be in the headlines for a couple days, and so I think that's what a lot of executives are thinking about.
But isn't there some honesty, right? Like, I think about the Exxon CEO of being honest and saying,
Yeah, Darren Woods said that on Friday at that roundtable that we broadcast.
Like, if you're a shareholder in a publicly held company, you want your CEOs to be transparent and honest about something that could mean investing money in something that doesn't ultimately pay off because it already hasn't. So I'm just trying to understand, that aspect of it.
Well, I do think the Venezuela situation in particular is a pretty unique one for the oil companies. They have a long history. They have lots of losses there. They have years and years of an unstable infrastructure and unstable environment. I'm not surprised that they're skeptical about the situation. And I think, particularly with Venezuela, I don't think there's too much disagreement that Maduro was a bad guy, that he had to go. The question is, what happens from here? What does it mean that we are running Venezuela? How long is that going to happen? Are we going to end up with troops on the ground? So I think there's just a lot of uncertainty there. And, I'm not surprised that some executives said, kind of hang on, let's wait and see how this plays out before I commit to anything, 4 days after this has all gone down. I do think you mentioned earlier the video from Fed Chair Jerome Powell. I thought that was pretty interesting, as you did, because he has taken all the provocations, all the name-calling over the last really 12 months and just kind of let it roll off his back until now. Well, and I thought that was pretty significant that he made that statement.
Mike, to that point, just in 30 seconds, the last 30 seconds we have with you, the markets have been letting all this roll off its back. Whether we're talking about the equity market or the bond market, we're seeing some losses in equities today and yesterday, but it's pretty minimal, I think, given what's happened over the last few days. Very briefly, when does this rhetoric start to affect the markets negatively?
Yeah, I think the markets looked at this Fed situation, seeing the widespread, different perspectives of commentary on the Hill about concern, and said, okay, maybe don't have to be too worried about this right now. Again, I think the markets, sort of like we were talking about with executives, are doing a better job at maybe not reacting to every little thing that comes out, and hopefully we'll continue to do that.
And hopefully we're going to come back to you soon, because we so enjoyed talking with you. Mike Townsend, Managing Director of Legislative and Regulatory Affairs over at Charles Schwab. Hey, by the way, tonight on Balance of Power, Republican Senator Tom Tillis joining Joe Matthew and team, so be sure to check that out. Still ahead, the playbook and battle for talent amid escalating salaries in women's soccer. One team owner, Carolyn Tish Blodgett, is up next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks lower across the board. The Dow holding just above 49,000. The S&P 500 index just above 6,900. But the Dow, the S&P, NASDAQ, and the NASDAQ 100 index, they're all trading lower. S&P right now down 57. That is a drop of 0.8%. Dow Industrials down 0.4. NASDAQ 100 index down 1.5%, while the NASDAQ Composite Index is down 1.4%. On a down day for much of the market, the Russell 2000 index of small cap shares is up by 0.3%. The 10-year at 4.13%. Gold is surging $53 the ounce to $46.39. Spot gold up 1.2%. Silver, meanwhile, above $92 the ounce, trading at a record. Spot silver up 6.4%. West Texas Intermediate crude oil 62.06 a barrel. WTI up 1.5%. And Bitcoin now up by 3.6%. Bitcoin at 97,436. Delta CEO Ed Bastian says President Trump's push to cap credit card interest rates at 10% will hurt banks and lower-end consumers. He told Bloomberg Television, quote, the knock-on effects are pretty significant. Today we're looking at shares of Delta down 1.8%, but its credit card partner, American Express, lower by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, we're already talking, we're already going because we're excited about this. I almost feel like we should just jump in. Let's do that. Bloomberg News sports reporter Vanessa Perdomo is with us. She joins us along with Carolyn Tish-Blodgett. She is governor and lead owner of Gotham FC, the football club, the National Women's Soccer League, NWSL team, and she's founder and CEO of Next 3 Ventures. It's an investment firm in sports, media, and entertainment. Welcome, welcome, welcome. I was going to start it off because, Vanessa, you and the sports crew, they put out a great story about like trends to watch in 2026, and one of it is kind of labor battles in women's sports, and talking about it getting messy, especially as you see escalating salaries and you see more stars leaving for Europe. So I kind of, Carolyn, want to start that with you. I mean, are you concerned about kind of losing players to European teams as we've seen salaries escalate? And welcome. and happy
diving right in.
That's how we roll here.
Let's dive right in. So I'm a firm believer that rising tides lifts all boats. We are, if you think about where women's sports was when we came in as new owners 2 years ago, they were not being talked about on Bloomberg. They were not, no one was investing in it. And when we came in, 99% of investments in sports went to men's teams. And so you're starting to see that shift. We came in 2023. There have been several new owners that have come into the National Women's Soccer League that we're in, as well as the WNBA and others. So you're starting to see a real shift. And with that comes challenges, and you start to see, I don't think our league would be as successful as we have been if there weren't other leagues that were competing for talent.
So this is good.
So yeah, I think competition is good.
But are you afraid of losing some key players?
Yes, I mean, obviously there has been news of players leaving for Europe. Right. I think you'll continue to see that. You'll also see players coming back. I mean, Lindsey Horan, Lindsey Heaps just signed with Denver. We've had players go play in Europe and then come back. So part of it, I think, when you zoom in, I think it feels like, oh my God, the sky is falling. Everybody's leaving for Europe. If we pull back and say, this is actually we're competing for global talent in a global game. This is kind of the natural evolution of this.
So let me ask the question in a different way, and it's about a strategy for making sure those players don't leave. It's a strategy for keeping those players on your team. How do you do it without breaking the bank?
So that is something we talk about on a daily basis. Our general manager, Yael Averbuch-West, has put together an incredible roster over the last year. So we've won 2 championships in the last 3 years. And when we think about why would a player want to come, a question we ask ourselves daily is, why would a player who could play anywhere want to come play for Gotham? And part of that, I think what they have in Europe is obviously these brand legacies that it's hard to compete with. Chelsea's been around forever. If you want to go, if your dream has been to play for Chelsea, that's hard to compete with. What we have is, I think, some of the best coaching staff in the business. We've been very much at the forefront in terms of investing in medical. So we probably have arguably the best medical director in women's soccer, if not, women's sports today. We've invested in mental health. We've invested in a performance coach. So we're kind of investing in, if you're sitting here today as a player and you say, where can I get better? I would arguably say Gotham is the best place to go. And so we're really thinking about what is our competitive advantage and where can we compete, and let's go invest there.
Well, I think the interesting thing is, obviously, Gotham had made this really big effort to sign these huge stars. The U.S. women's national team, there was 4 or 5 stars. You have Jaden Shaw, who just came in last year, but Midge Purse, Emily Sonnet, Rose Lavelle, the NWSL 2025 MVP, for the championship game. You have these massive stars, and it felt like a concerted effort to do that, to make sure you have these big stars. And the league used to rely solely on the U.S. women's national team stars. Tell me about where that's gone. Why is it still important to the business to have stars like that? But how much it's grown over the last couple years?
So, yeah, I think it's a really good question. So I'm a big believer that stars drive viewership, and stars drive particularly a casual fandom. I built my career in marketing. I used to run marketing at Peloton, and that was really our model, was help these instructors turn into stars. That is something we've brought to Gotham, and we've taken not just the stars that we brought in, like a Rose and a Sonnet, but also helped someone like a Jalen Howell kind of find her voice and become more of a star.
Like Robin Arzon, I was thinking.
Like Robin Arzon, yes, yeah. Robin and I worked very closely together. Killer, right? But we helped her, and she really knows how to build her own brand. So I don't want to get any credit of that, but we helped these instructors really turn into household
But you guys
names.
Appreciate it certainly as part of the Peloton brand.
Yeah. Exactly, and that's what we're helping to do, I think, for a lot of our stars at Gotham. I think that really, again, that drives viewership. That brings the U.S. women's national team is an opportunity to bring a casual fan in. If you think about how many people watched the Olympics last year, the U.S. team win a gold medal, I think it was like 9 million people. Yeah. We have an opportunity at Gotham. 6 of those players played for Gotham at the time. We can help bring those people and bridge that gap from U.S. fandom to Gotham.
Nuts. I mean, 6 people is like amazing to have that kind of power. I mean, let's talk a little bit more about like the overall business of the NWSL. You had mentioned it before. You have new owners coming in, and one of them is a colleague from the NFL. Arthur Blank paid $165 million to bring an NWSL team to Atlanta. How big this business has got from 2019, from a $2 million expansion fee to $165 million. What's the next step? Like, how does that keep going, and how do you make sure that it doesn't plateau after such a big year?
Yeah, there's been so much news in the NWSL. We haven't even talked about the Blanks coming in. Yes, we're so happy that Arthur and his son Josh have joined us in the league. I think one of the real bright spots of the league, I think, is the boardroom, and is the compilation of owners in this room. Yeah. You have owners like the Wilfs from the NFL, the Blanks now, and obviously our family. You have owners from the NBA, from MLS, from European League. So you really have which
means they believe in it. They believe in the NWSL product, right? These long-term sports owners.
You very much feel that. The conversations at the board are about how are we going to grow sustainably? How are we going to reach the next level, as you've asked. It is not about like, how can I make a quick dollar and turn around and sell it? This is a group of owners that want to be there and want to, invest in its future.
Like building out their portfolio
in
a big way.
And deeply care.
Yeah. You talk about investing in the future. Before we got going, I talked about growing up watching the Giants, seasons tickets my dad had, and we all kind of went to games. They've had some highs and lows. They need a new head coach. Any update? And I'm just curious, Jason Harbaugh, are you guys talking to him? John Harbaugh, sorry. Are you guys talking to him?
I definitely cannot be the one to break any news here. We did not time this interview with the coaching search, so nothing to say, but excited, obviously, for the Giants' future.
But there'll be a new coach soon.
Well, obviously there will be a coach. I just won't be naming who it is.
Do you have one?
I cannot, no.
Hey, listen.
I have nothing. I've just been in my office all day.
All right, it's John calling. No. Hey, just quickly, 20 seconds. You have invested in volleyball. You invested in Sale GPE, which is something we've covered here. Anything else you're looking at for your portfolio? Just got about 20 seconds.
Oh, yes. Yes, nothing to announce today, but we're continuing to look at emerging leagues, look at emerging sports. I think we're very focused on youth sports and who are the leagues that are really building up the kind of grassroots sports from the ground up.
Okay. Will you come and tell us when you've got a new coach?
Yeah, I'm going to run right over.
Thank you, Vanessa. Also, Carolyn, thank you so much. Really appreciate it. Carolyn Tisch-Blodgert, lead owner of Gotham Football Club, and of course, our Vanessa Perdomo. She's Bloomberg News sports reporter. Thank you. If you missed any of it, check it out on our podcast feed.
Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, just coming up on the last hour of trading here on Bloomberg Business Week Daily. I'm looking at equity markets. We're down across the board, most notably on the NASDAQ 100, down about 1.5% if you're looking at the biggest percentage decline. But we are off our worst levels, Tim, but we're also off our best levels of the session.
Yeah, if you look at what's moving in the S&P 500 today, energy is in the green, up more than 3%. Consumer staples up 1.2%, but consumer discretionary down more than 2%. Information technology down 2%. And communication services, Carol, down 0.7%.
Yeah, those higher oil prices are going to play into our next discussion. I'm Carol Masser along with Tim Stanovic. Let's get to some stocks on the move today. With us is Bloomberg News equities reporter Natalia Kinijevic. Good to have you here. Tim just
Thank you.
mentioned higher oil prices, and that's got a group of stocks moving today.
Exactly. So let's talk about petrochemical stocks. So one of them, LyondellBasell, the ticker is LYB. The stock is up by 6.6%. So this is all about the so-called oil to gas ratio. So all these petrochemical companies, they use, in the US, they use natural gas to produce their products. In Europe, they use oil or mostly oil in Europe or in Asia. So it means that natural gas prices are still at about the same level. Oil prices are moving up. It means that production costs for global producers are moving higher. Here in the US, they are still the same. And Bloomberg analysts are saying that potentially global petrochemical producers will have to increase prices for their products, which means higher margins for US petrochemical producers. And we also saw that Citigroup analysts removed downside catalysts for LyondellBasell. They also raised price target to $46 from $40.
Yeah, I'm seeing shares of APA up right now in the S&P 500 by more than 6%. ConocoPhillips up right now by 5.5%. Devon Energy up by close to 5%. Valero up by 4.4%. So a good day to be long those companies, but it's been a challenging couple of weeks.
Yeah, and Dow Chemical, right, is also one of the names that is definitely among an outperformer, I believe, in the S&P 500. So we've definitely seen those names, some outperformance there, and you understand fundamentally, at least for today.
And also, it's interesting when I look at positioning across different sectors, positioning across energy sectors are very low. It means that there is still more room for upside if investors want to increase exposure, so it's not excessively bullish.
Okay, that makes sense. Got to talk about also making sense, talking about banks, because they continue to report their numbers. Wells Fargo is on your radar.
Yeah, so Wells Fargo shares are down by almost 5% today. So
they're just getting hammered today, aren't they?
Exactly. Yes, such an interesting actually earnings season. So profit estimates missed because severance costs drove up expenses. The company is spending about $612 million on those costs. And CEO also said that he expects higher expenses in the fourth quarter because the bank continues to lower this cost base, and more job cuts are likely to come this year. Just to give you some numbers, guys. So at the end of September, the bank had almost 211,000 employees, and that number was just above 205,000 at the end of this year. So the bank is lowering the number of employees. And also, of course, everyone is watching how bank executives are reacting to Donald Trump's proposal to reduce that credit cap interest rate. And of course, Wells Fargo is saying that, yes, it is a concern for industry. It could potentially hurt consumers' access to bank credit.
There's a narrative around these big banks.
For sure.
And we're definitely seeing it play out. So we should all just jump on a ship and go cruising.
Yeah, let's take to the seas.
Let's take to the seas. Royal Caribbean is something that you've been watching today.
Yeah, so Royal Caribbean shares are also down by 5%. So today we've heard from a couple analysts. So one of them has actually put this company on its so-called short downside list. So they see some headwinds for the company. So for example, they say that demand is slowing down for cruise operators. And then we also heard that pricing is also an issue for some of them. And they also say that supply can be a challenge, and maybe there is some kind of oversupply in this area overall. And of course, today we've got news that the U.S. State Department kind of thinks about suspending visas, right, for multiple countries. And we saw shares of hotels, airlines, online travel operators are moving lower across the board.
I feel like these cruise guys have been on a tear, though, for a few years. And I feel like we've talked to a bunch of the CEOs or key executives, and they've been pretty upbeat and positive, but that's a very different tone.
Exactly. Just last year in December, everyone was so positive. Now we see that Delta Airlines also was not that great in terms of outlook. So
yeah, you do
travel
wonder.
sector is definitely something to watch.
All ahead of the World Cup.
Oh, yeah.
Which I think is very notable, because you have a
sure.
lot of people who are supposed to come to the United States, and how are they going to actually get here? Not just the U.S., but North America. How are they going to get here?
When does that start? Summer?
This summer,
June, yeah.
Tickets are so expensive, I checked.
Oh,
Are they? Are they?
You know what's funny? My parents were like, "What should we get? Our grandkids for holidays?" And I said, "Oh, World Cup tickets would be cool." And then I found out how much they were, and I was like, "Actually, let's just go to a different soccer game." I'm not going to make you
Probably
guys do
watch
that.
it together on
Yeah.
around the TV for a family. Natalia, thank you so much. Check out our Stock Movers podcast, 5-minute episodes. You can find it on Apple, Spotify, or anywhere you get your podcasts. Coming up next on TV, The Close. Tim and I continuing right here on radio.
This is CBS News on the Hour, your home for original reporting.
I'm Jennifer Kuiper. High-level talks at the White House on the future of Greenland have ended today with no resolution. CBS's Cammie McCormick.
Denmark's Foreign Minister Lars Løkke Rasmussen said he'd like to take down the temperature, so the talks will continue.
We agreed that it makes sense to try to sit down on a high level to explore whether there is possibilities to accommodate the concerns of the president while we at the same time respect the red lines of the Kingdom of Denmark.
He said the fundamental disagreement over Greenland remains.
It's feared that thousands of people have been killed in Iran during anti-government protests and that executions could begin. President Trump warns that if that happens, the U.S. will take very strong action. CBS's Holly Williams in northern Iraq.
A U.S. official has confirmed to CBS News that some personnel at the Al Udeid Air Base in Qatar, that's a giant U.S. air base here in the Middle East, have been advised to leave as a precautionary measure. Now, the background to that, of course, is that President Trump is mulling over potential military action against Iran because of its recent violent crackdown on protesters.
Angry House Republicans say they'll punish Bill and Hillary Clinton for ignoring a subpoena to testify about the late sex offender Jeffrey Epstein.
The House Oversight Committee says it will meet next week to advance a contempt of Congress resolution against former President Bill Clinton and former Secretary of State Hillary Clinton after they failed to show for separate depositions about Jeffrey Epstein.
Well, it's very unfortunate.
Republican Committee Chair James Comer says.
A week ago, the Democrats on the Oversight Committee wanted to hear from the Clintons.
Criminal contempt of Congress is punishable by up to 1 year in jail. Allison Keyes, CBS News, Washington.
President Trump's special envoy says the U.S. is moving into the next phase of the Gaza ceasefire plan. CBS's Linda Kenyon.
Steve Witkoff posted on social media that the next phase of the ceasefire involves disarming Hamas, establishing a new government, and reconstructing Gaza. Witkoff also said the U.S. expects Hamas to immediately return the body of the final hostage. Release of the hostages alive and dead was part of phase 1 of the Gaza ceasefire deal.
On day 3 of the New York City nurses' strike, the union accuses one hospital of illegally firing 3 nurses. Another hospital criticizes what it described as the union's reckless demands and troubling proposals in contract talks. Nurse Nancy Hagans is president of the New York State Nurses Association.
Stop your nonsense. Stop the lies. You're going around talking about nurses' salary. You made $60 million last year. And what did you do?
The nurses want better pay and staffing levels. Stocks are trading lower on Wall Street. This is CBS News. A developer is hoping to convince a judge to lift a Trump administration order they say could mean the death of a project that's 60% complete.
The Empire Wind project is designed to power more than 500,000 New York homes. The Norwegian company Equinor said it would likely have to kill it if construction can't resume soon. This is one of 5 big offshore wind projects on the East Coast that the administration froze days before Christmas, citing national security concerns. On Monday, a judge ruled a similar project serving Rhode Island and Connecticut could resume. The case is being heard by a judge who was appointed by President Trump. Steve Kathan, CBS News.
Luxury retailer Saks Global has filed for bankruptcy, preparing to reposition itself after getting about $1.7 billion in financing commitments. The company that owns Saks Fifth Avenue and Neiman Marcus says that it has filed for Chapter 11 bankruptcy in the Southern District of Texas. Jennifer Kuiper, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we're coming up on the last hour of trading. We are back on Bloomberg Business Week Daily. Carol Masser, Tim Stenivek, live here in our Bloomberg Interactive Brokers studio. We've got a market pretty much down across the board, but we're off our worst levels of the session. Still down about 1 1/3% on the NASDAQ 100. Dow Jones Industrial Average about 1/4% to the downside. And we're looking at an S&P 500 down about 50 points, down 0.7% on a day when got a bunch of big bank earnings, and we know earnings just off and running. I'm curious how this season will ultimately play out, because already we're feeling, I don't know, a little bit of weakness here.
Are we? 2 days in a row of declines on the S&P 500, still up 1% for the year.
Okay.
Zoom out a little bit.
No, I'm not ready.
Okay, you're not ready.
Yeah.
Okay.
It's going to be, but I think it's interesting when the banks are, they did really well last time around.
Yeah, they did. This is a
different.
Certainly a different tone. That's going to be part of our backdrop. A big part of our backdrop, though, today is, I love this story.
Credit card rates.
This story.
I am like obsessed with this story.
That's not what I was going to say.
Oh, okay. What were you going to say?
That is a big part of our program.
What were you going to say?
The CEO guide to navigating President Trump, which includes the proposal to cap these credit card rates.
That's a big deal.
That's like going to inform the entire program today, because there's been a year ago. If you're think about where we were a year ago.
Yeah.
We were reporting on all of the CEOs in the transition going to Mar-a-Lago to talk to the president.
Right.
And then getting ready to go to the inauguration to show up.
Yeah.
What have we learned? What have they learned in the year since? And how have, in recent days, CEOs started to think maybe differently? And it's all ahead of Davos, of course.
All right.
But credit card rates are a big
So
deal.
that's fair.
You love this story. We did this on Monday. You were out.
I know.
We need to update everybody now because all the big banks are pushing back on it.
Yeah, I think it's kind of interesting. I mean, I don't know. So we have a lot of questions on that one. Also, we are, as we know, waiting again, another week where we're waiting on the Supreme Court, their tariff ruling. We talked earlier, there is no ruling today. The Supreme Court came out and said no ruling. So we're going to be joined by one of the CEOs who's suing the Trump administration. That's coming up in our 4 o'clock hour.
Bloomberg Business Week is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide.
And I should point out, metals on the move today in a big way. So, all right, let's get a check on the trading session. We're just about 50 minutes to go until we wrap up the trade on this Wednesday. Let's turn things over to Charlie Pellet.
Hi, thank you very much. Lots going on. Do want to begin developing story. Headline right now on the Bloomberg Professional Service. OpenAI striking an over $10 billion computing deal with Cerebras Systems. Yesterday, you recall, Cerebras was in talks to raise roughly $1 billion in a new funding round. That round would have valued the startup at $22 billion. Today, though, a $10 billion deal. We are seeing both NVIDIA and Advanced Micro Devices moving on this news. NVIDIA shares, they're down off session lows, down 1.8%. Advanced Micro Devices, AMD, up now by about 0.9%. So those headlines coming on a down day for for much of the market. As you guys alluded to, bank stocks certainly helping move things lower. Right now, the S&P is down 45. Key takeaway, though, off session lows, 69.18, where we stand on the S&P up, down by about 0.6%. We do have the Dow down 0.2%, NASDAQ down 1.1%, and the NASDAQ 100 index down 1.2%. Russell 2000 index of small cap shares climbing now by 0.5%. 10-year 4.14%. We do have the 2-year currently yielding 3.51%. Gold up $51 the ounce, higher now by 1.1%. The big news, though, silver surging 6.9%, $93 for an ounce of silver. West Texas Intermediate crude 60.08 a barrel. WTI down 1.7%, and Bitcoin right now up by about 3.8%, 97,650 now on a Bitcoin. Briefly, those bank stocks, just to bring you up to date, they're all lower after earnings. Citigroup down 3.7%, Wells Fargo down 4.7%, Bank of America down 3.8%, JP Morgan Chase, which reported yesterday, down another 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Perhaps unsurprisingly, the big banks are coming out against President Trump's proposed cap on credit card fees. Citi's CFO Mark Mason said, quote, a cap would likely result in a significant slowdown in the economy.
Okay, I
kind of heard
that.
something similar from Delta CEO Ed Bastian yesterday.
They're all kind of pushing back, right?
Yeah, here's what Brian Moynihan, Bank of America Chair and CEO, said on this morning's earnings call.
If you bring the caps down, you're going to constrict credit, meaning less people will get credit cards, and the balance available to them on those credit cards will also be restricted. And so you have to balance that against what you're trying to achieve from the affordability. We're all in for affordability. You all know how we run our consumer business. It's the most fair to the consumer, and that's why we get good growth and high customer scores.
Was Bank of America CEO Brian Moynihan on the earnings call, pushing back on explaining to Carol why the bank, along with other banks, are against President Trump's proposed cap on credit card fees.
We have a million questions.
We do. Fortunately, we got two people who are going to answer 1,000,001 for us.
Paige Smith is with us. She's Bloomberg News consumer finance reporter, and Diksha Gera is with us. She's global fintech and payments analyst. Diksha joining us from our Palo Alto bureau. Paige joining us right here in our Bloomberg Interactive Broker studio. First of all, Paige, let's start with you. What do we need to know about what the president wants to do, and what kind of impact would it have on these big banks?
Well, I think that it's important to say, I know that it has been certainly the talk of the day and also of the week with earnings and just kind of top of mind for everyone at the moment. But important to note that all we sort of have right now is a few posts on social media from the president, essentially threatening these banks and saying, you know, you need to comply or you will be, quote, in violation of the law. Exactly which law will be violated?
Yeah.
That is a great question, Carol. We are waiting to see any sort of formal proposal from the White House. We don't have any specific details at this moment. There's still a lot of unknowns, but that has not stopped a number of executives from responding and markets sort of more broadly responding as well.
Diksha, come on in here. You cover this for Bloomberg Intelligence, FinTech, and Payments. And here, if you're watching us right now, you can actually see the president's post from back on January 9th that called for this. Is Citi CFO Mark Mason right? Would a cap result in a significant slowdown in the economy? Is Brian Moynihan of Bank of America right? Will this hit? Will fewer people be able to get credit cards as a result of this?
Well, that is the point, right? So it's not that all of this is going to result in a consumer benefit, right? The companies will probably react by either raising fees or rapidly reducing credit availability. And part of it will actually be for below prime borrowers where the stress will be felt the most. And I mean, Tim, you have to understand, right? Some of this cap will actually make these customers non-viable for the lenders. So it is only logical that they have to scale back. And so what Citi and BofA both have said, I think it makes total sense.
Diksha, the reality, though, it does feel like increasingly that these big banks, the customers that they choose to issue cards to are kind of the upper economic strata. So I'm not quite sure why they kind of do the credit checks. These are people that they're not too worried about. So then why do they have to be able to charge these really high rates?
That's a very good point, Carol. So We actually put out a note on this morning, kind of trying to lay out the lay of the land. So your likes of American Express, JP Morgan, BofA, all of them generally tend to cater to more super prime and prime plus customers, where APR rates are relatively lower. The prime, near prime is more Synchrony and Bread, and Cap One also is, after Discovery, is kind of doing a little bit more prime plus. It's the lower segment customers that get affected more. That's where APRs are really high, in some cases as high as 30%. So I mean, the cap applies across the board, but it also impacts the most below prime borrowers the most.
I want to bring Paige in here. She's nodding, but I kind of want to, we don't have a ton of time, and I want to make sure we're getting to everything here. And we'll get back to Diksha in a second because she also covers fintech. You cover fintech too, Paige. But you had a story cross just before noon today that I think really caught me off guard. Built. It's not B-I-L-T. I think a lot of New Yorkers, people who live in areas where you pay rent for a long period of your life and don't necessarily go and buy a home, are familiar with this. It's a credit card that is popular with people because you can use it without a fee for paying for your rent. They came out with a new product today that caps at 10%.
Yeah, they actually came out with 3 new products today, which is quite interesting. So as you said, Built is a program or a company that's sort of best known for giving consumers points for paying your rent and now mortgage on time. So they came out with 3 new credit cards today. The credit cards were, these new credit cards had been expected from Built. It's not like that was an unexpected announcement, but certainly the 10% rate cap was certainly caught a lot of folks by surprise, I would say. And it is important to note that 10% rate cap is not permanent. Yeah. Very important to note.
Be sure to read the fine print, folks.
Be sure to read the fine print. And also,
Always.
it is a lot of credit cards have intro APRs, and some of them actually have even lower intro APRs for a longer period of time. So just important to note that, but certainly the timeliness of this can't be ignored in response to the president's comments.
To be fair, the variable annual percentage rate on Built's, cards will jump as high as 34.74% after 1 year.
Correct.
Well, I want to put this to both of you. Paige, why do they have to be so high? Is it, I understand, to cover losses, right? I mean, there's a pool, some pay on time, no problem. Is that what it's simply about?
I think that part of it certainly part of it is that. I think it's also really important to understand how many, in today's day and age, how many parties go into, every time you swipe, tap, or use your credit card. There are a lot of parties involved in this. But I will kick it over, honestly, to Diksha, because I know she's the expert on sort of more of the economics on this, and it really, a lot of it comes down to margins.
Yeah, Diksha, come on in here. Respond to that.
Well, Tim, the bottom line is, for some of the larger banks, this is one of the most lucrative businesses, and which is part of the reason why you're seeing this massive pickup in the BNPL boom cycle. Like, a lot of people have questioned this, right? Like, in terms of the rates, in terms of reward points, and there's a lot of ton of debate about late fee. But what I want to highlight is some of the monoliners, card issuers, they will be the worst hit if this cap comes across, right? Our team put out the report on this. The highest percentage of revenue and profit impact will be on Capital One, Synchrony, and Bread Financial, and Amex less so. But the idea is, and this impact we've calculated without even assuming that they will have to cut back their balance sheet, they will have to reduce lending, because some of these customers will not be viable for them.
We'll continue on this. I didn't get to get all heated and bothered, but to come. Paige Smith, consumer finance reporter at Bloomberg News. Diksha Gera, global fintech and payments analyst at our BI team. We're back in a moment.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We are off session lows, 39 minutes to go ahead of the closing bell. But the Dow, the S&P, NASDAQ, they're all in the red. Russell 2000 index of small cap shares. It is a bright spot on this Wednesday afternoon with the Russell 2000 index up by 0.5%. But keeping it all in context, S&P now lower by 53, again to underscore off session lows, down 0.8%. The Dow right now down 0.2. NASDAQ down 1.3%. The NASDAQ 100 index down 1.4%. 10-year yield 4.13% with a 2-year at 3.51%. Gold is surging another $50 the ounce to $46.37, up 1.1%. The move in silver continues, with silver now pushing higher at a record, yes, but above $93 the ounce. Silver, $93.43. It is up by 7.5%. Brent crude is down 1%. West Texas Intermediate down 1.2%. Banks, including Citigroup, Bank of America, Wells Fargo, all trading lower after earnings. So why are these stocks selling off? Cameron Dawson is Chief Investment Officer at New Edge Wealth, and she was a guest on Bloomberg Open Interest.
When we look at the banks, we just have to appreciate that the bar has gotten very high, which explains some of the negative share price reaction.
Cam Dawson of New Edge Wealth. Citigroup shares again down 3.8%. Wells Fargo down 4.8%. Bank of America down 4%. Morgan Stanley, Goldman Sachs, they're both out tomorrow morning bright and early. Morgan Stanley down 1.3%. Goldman Sachs shares down by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week Daily. Carol Master, Tim Stanovic, live here in our Bloomberg Interactive Broker Studio. Charlie showing some of the trade when it comes to oil today. We want to bring it up for you because we have seen some reaction based on comments from President Trump. That's a live shot. President Trump in the Oval Office, surrounded by individuals, something we are monitoring in case there are any headlines on that. He did say something when it comes to what's going on in Iran. President Trump saying he had been assured that Iran would stop killing protesters in a signal that he could hold off on a threatened military response to the repression of widespread demonstrations in the nation. He said specifically, we've been told that killing in Iran is stopping. It stopped. Again, telling reporters in the Oval Office and that there's no plan for executions or an execution. And we did see crude falling as a result. Crude futures, just taking a look here, just down about 1.7%. So we are seeing a little bit of a pullback in prices.
They were as high as 2% earlier in the day.
So pulling back,
yeah,
quite a swing right off that higher level.
Well, speaking of the president, he's just stunned Wall Street by calling for a 10% cap on credit card interest rates. He's pressuring energy companies into rebuilding Venezuela's crippled oil infrastructure. His administration's criminal investigation into Fed Chair Jay Powell threatens the future of independence of U.S. monetary policy. Those are just some of what we've seen
only
in
February,
recent days.
No, January 14th.
February.
It just feels like February 14th. Happy Valentine's Day. No, it's not. It's January 14th.
Too much Sudafed?
Too much. I was out sick for a couple of days. Too much cold medicine, to be sure.
From public attacks on media conglomerates to the ever-present threat of new tariffs, the president has spent the past year blowing past the norms that have traditionally governed relations between the Oval Office and titans of industry. So write Matt Boyle and Nancy Cook in today's Big Take. It's a must-read on the Bloomberg Terminal and at Bloomberg.com. It's the CEO playbook to navigating Trump. Matt Boyle joins us now here in the Bloomberg Interactive Broker Studio. He's senior management and workplace reporter for Bloomberg News. You write that presidents have long pressured business leaders to back their agendas, but FDR did it, Bill Clinton did it. You write, what's different about how the president right now is doing it?
It's just how ruthless he is about it and how unpredictable. I mean, with FDR, he was battling Henry Ford over the New Deal and the National Recovery Administration, but you knew what sort of the ground rules were. You knew what they were fighting over, and there were norms and institutions and places where that fight would play out. Now this fight is taking place over Truth Social, over social media. Cracker Barrel gets, yelled at by Trump for their logo redesign. Trump tells Coke to put cane sugar in their trademark, flagship soda. It's just coming out of left field. You've got also, you mentioned the oil companies, you mentioned Wall Street. Defense contractors were just told by Trump, no more stock buybacks, get more productive, cap your executive pay at $5 million. You know what the defense contractor CEOs make?
I looked it up. There were some nice double-digit millions.
Double-digit, well over 20 million for all of them. So it's just, that's what's different about it today. It's just the volatility and the unpredictability.
You can cap my pay at $5 million.
Me too.
I will say that. I will say that right now.
I'll join you there.
Deal. Hey, having said that, it's one of the things we ask a lot, Matt, is why aren't we seeing more pushback from the corporate community? We kind of know it because you don't want to be on the White House's radar, right? Because you don't want to have the president putting something out on social media about you. Having said that, Jay Powell, not the business community, does a video, pushes back. We saw other business leaders, Jamie Dimon, it seems like pushing back when it comes to credit card caps, others in the big bank sector, Darren Woods of Exxon, when it comes to rebuilding the infrastructure, energy infrastructure in Venezuela. Are we starting to see any kind of shift? What are you hearing when you...
It's selective. There's not many CEOs have the clout of Jamie Dimon and the ExxonMobil CEO. I mean, those two gentlemen, just legends in their field. Your average CEO running a mid-size, or a smaller Fortune 500 company, is not about to go out on a limb and say something about tariffs or trade or what have you yet. Now, we'll see what the reaction is with, with Dimon's comments, but, also how hard is it for Jamie Dimon to be, defending the sort of the interest rate thing? There's sort of a no-duh element to it.
Yeah.
But we will see, of course, if Trump's lower approval ratings and the upcoming midterms, make CEOs more or less likely to speak out. There was a great piece in Bloomberg Opinion today by a Yale School of Management leadership expert saying now is the time for CEOs to speak up, although I think I've read that opinion piece many times.
But isn't it so interesting, coming off the pandemic, and I feel like George Floyd, where all of a sudden, I think, as CEOs navigated all of that, all of a sudden they were talking, and a lot of them were accessible because they were home just like the rest of us. We were blown away. I was blown away by the amount of CEOs we could reach, and who would talk about who would talk about these serious issues and say, "Yeah, it's time for change."
But just to jump on that, Matt, and I know this is where you're going. I mean, those CEOs and those companies were essentially punished for doing that in the wake of now that the tables have turned so much with regard to who's in power and the narrative that this administration wants to see.
Exactly. I mean, look at Target was sort of, coming way out in front. George Floyd happened in their backyard. They were one of many companies to come out with huge racial equity investments and pledges. And all of that is dissipated.
So I want to get to the playbook because this is a guide, but we're not going to get there yet. We're going to get to the playbook. Before we get there, one thing that I noticed, and we're going to be speaking to Rick Woldenberg, he's CEO of Learning Resources and Hand to Mind a little later. It's a family-run business. It's a century old. It's out of Chicago. They make educational toys. He's one of the many small businesses that's suing the Trump administration over tariffs. We're seeing pushback from small companies right now that maybe they're, I don't know if because they're so small they can't be punished. I don't know, or they're willing to take a risk because it's an existential threat to them. Why are we seeing some small non-public companies speak up?
Well, tariffs is one thing. I mean, there's more than 1,000 companies that have decided to sue over the tariffs. The bigger ones get all the attention: Costco, Revlon, Goodyear Tire. But you are seeing plenty of smaller companies, particularly ones that are really exposed. And toy companies, my goodness, there's one of these sectors most exposed and most threatened by these tariffs. So but I'm not sure if the argument is, well, you're smaller, nobody might notice. I mean, it's a man who notices just about anything that's on the media, TV or social media. But perhaps it does signal a sense that if you are, if you have some legs to stand on, and with tariffs, I mean, this is one area where we have seen some education on the part of CEOs. CEOs are able to come out and say, look what this is doing to our customers. Look who's going to have to pay the tariffs. It's not China. If you have some sort of legitimate credibility on an issue like tariffs, if you're a toy company, or immigration, perhaps, if you depending on who you employ in your workforce, I think even a small business CEO might be able to come out and say something, but it's still few and far between.
Well, okay, so
let's talk about the playbook.
Let's go through the playbook, because I love this, because this is a president who does like to talk to people, whether it's members of the press, whether it's political leaders, whether it's CEOs. So that's a key aspect for a CEO and part of the playbook. Find a way in.
Exactly. That's sort of our first, the first rule in the playbook is find a way in. We know Trump will answer his mobile phone. We know he gives out his number to CEOs. He talked a lot in his first term about how Tim Cook was his favorite CEO because, they would talk to each other on the phone. Tim would call him. I think maybe his favorite CEO is now Jensen Huang of NVIDIA. We're not really sure where it's falling out, but given what he's been saying lately. So, yeah, he is accessible. The United Airlines CEO, Scott Kirby, one of the few CEOs who talked to us on the record about his relationship with Trump, did say, love him or hate him, he's accessible. And with the obvious implication that the previous person in the White House, Joe Biden, was not as accessible to CEOs like him.
You reached out to a lot of CEOs, and a big team also helped with this.
Yes,
around the Bloomberg newsroom. What can you tell us about why CEOs did not want to talk on the record about the president? Is there just nothing to gain?
No upside, exactly. No upside. So third rail, no reason for them. Why should I when no one else is going to? So even the groups like the Business Roundtable and the Chamber of Commerce kind of went back and forth with them a lot. Very pro-business. You'd usually think they'd be able to be, a voice of corporate America. Nothing on the record. So most of our conversations were on background, and that's where people felt more candid.
Okay, so let's say you get a seat at the table.
Yeah.
You get access to the president. What's the next step in the playbook?
Well, it's who you're talking to within the White House. Are you getting Trump directly, or are you going through Susie Wiles or Besson or Lutnick, or even some of the other sort of aides that don't get a lot of the headlines? Like we had heard that the director of the White House Office of Public Liaison, Jim Goyer, is a good person to talk to because that department is set up to be a sounding board for American businesses. So it might not be someone who's, a high-profile name, but the point is to get a way in, any way in. And then once you're in, to maneuver, as we say, quietly maneuver, because you don't want to be blabbing about your discussions in the Oval Office, because Trump may have interpreted your conversation far different from how you interpreted it. So the last thing you want to do is go crowing about how you have this access. But that is the second step in our playbook, is to quietly maneuver once you have an in.
I love that. All right, let's go to number 3, because this has to do with educate, don't bellyache.
Yeah.
So getting a seat at the table is great, but what happens next, you say, matters more.
Exactly. It's how you present your topics, your issues, your sort of ask. Everything's a transaction with Trump. So with tariffs, they're a great example. You cannot go in and say, tariffs are dumb, tariffs are bad policy. You're literally putting your hand in the blender, as one of the people we spoke to said, David Urban, who's fantastic on this topic. So you have to go in and educate. Trump is a president who considers himself a business genius, but doesn't read briefing books. Doesn't really like to read a ton of stuff in general. So you have to go in there and sort of show. Visual aids often help, we've been told. Kind of show, okay, this is how the tariff is going to impact your average American, your voter, let's say. And we have been told that CEOs like Brian Cornell at Target have done a pretty good job of that education process without sticking their hand in the proverbial blender.
Does it help to bring a gold watch?
That is another part of the playbook. Yes, it can't hurt to certainly bring a watch, or to deliver a trophy, some type of statue, or, with the Apple CEO Tim Cook. Again, he has a great relationship, but he still felt the need to present Trump with this sort of, glass plate with the Apple logo and all this stuff. So yeah, this is a president who likes trophies and trinkets. So again, why not?
All right, and remember, everything's a transaction. We say that so much. It's almost become a drinking game for us. It's a transactional president. Matt Boyle, everything you read is always so important, engaging, and fun. Matt, thank you so much. Matt Boyle, he's Senior Management and Workplace Reporter at Bloomberg News, joining us here in our Interactive Brokers studio.
I'll be joining Matt Boyle and Nancy Cook. They're going to answer your questions about this story. It's in a live Q&A that's going to happen a week from today, 10:30 a.m. Set a reminder to tune in. You can do that at Bloomberg.com, where you can find the story.
Love those conversations, and you get to actually ask things to Matt and others directly, so good stuff. Hey, right now we've got folks asking President Trump questions in the Oval Office, so let's head there now.
The killing has stopped. Who told you that the killings have stopped there?
We have been informed by very important sources on the other side, and they've said the killing has stopped and the executions won't take place. There was supposed to be a lot of executions today, and that the executions won't take place. And we're going to find out. I mean, I'll find out after this. You'll find out. But we've been told on good authority, and I hope it's true. Who knows, right? Who knows?
We've
Crazy
seen the body
world.
bags, so how do you trust
No,
them?
you've seen that over the last few days, and they said people were shooting at them with guns, and they were shooting back, and it's one of those things. But they told me that there'll be no executions, and so I hope that's true.
Does this mean military action is now off the table against Iran?
Well, we're going to watch and see what the process is, but we were given a very good statement by people that are aware of what's going on.
Considering military action,
when they say no executions, everyone is talking about a lot of executions were taking place today. We were just told no executions. I hope that's true. That's a big thing. Yes, ma'am.
The foreign minister of Greenland, she said a while ago in a press conference in an embassy of Denmark that she made very clear in the meeting that happened here in the White House what are their limits. She also said that it was a very respectful meeting. Are those limits going to be respected?
Well, we're going to see what happens with Greenland. We need Greenland for national security, so we're going to see what happens. They're going to brief me on the meeting right after this conference. In fact, the sooner I get you out, the faster I'm going to know exactly what happened. But we have a very good relationship with Denmark, as you know. We'll see. But, we're doing the Golden Dome. We're doing a lot of things, and we really need it. If we don't go in, Russia's going to go in, and China's going to go in. And there's not a thing that Denmark can do about it, but we can do everything about it.
More in what they can do there?
Well, we're going to see. I mean, look, we're going to see what happens, but we need it. I'm not the first one. This was talked about by President Truman, and 40 years before President Truman, they were talking about it. They've been talking about this for 100 years. This is not anything so new. A lot of people don't realize that, but this was a hot subject. Probably not as hot as it is now, but it was a hot subject for a long time. We need it for national security, and that includes for Europe. And I spoke with, as you know, Mark, the head of NATO, and he really wants to see something happen. It's very important for national security.
It's being reported that Health and Human Services released frozen funds to Planned Parenthood. I'm wondering why this happened and why Planned Parenthood is receiving any federal funds.
I don't know anything about that. Bobby, do you know anything about that?
What was the question?
It's being reported that frozen funds were released to Planned Parenthood in December by HHS. I'm wondering why that happened.
I have not heard that.
Mr. President, on NATO, right now it sounds like you are saying that you would potentially acquire Greenland by force. That would be a NATO country.
Well,
Are you saying that? Would you do that?
No, you're saying that.
Would you
I
acquire
didn't
that
say
by
it.
force?
No, you're telling me that that's what I'm going to do. You don't know what I'm going to do.
So what are the options?
Your network doesn't know either.
The Danish foreign minister said that there's still fundamental differences after the meeting with Rubio and with the vice president. Are you willing to leave the NATO alliance in order to get what you want with Greenland? What are the options right now?
I wouldn't be telling you what I'm willing to do, certainly. I'm not going to give up options, but it's very important. Greenland's very important for the national security, including of Denmark. And the problem is not a thing that Denmark can do about it if Russia or China wants to occupy Greenland. But there's everything we can do. You found that out last week with Venezuela. There's everything we can do about things such as that. Not going to happen. We're not, I can't rely on Denmark being able to fend themselves off. They were talking about they put an extra dog, and they were serious about this. They put an extra dog sled there last month. They added a second dog sled. That's not going to do the trick.
Denmark fought alongside the United States in both Afghanistan.
Thank you for telling me that. I appreciate it. But I have a very good relationship with Denmark, and we'll see how it all works out. I think something will work out. Yeah.
Venezuela, Cabello, the de facto number 2 in Venezuela right now, he seemed pretty reluctant to work with the U.S. And obviously he's
they just gave us 50 million barrels of oil.
The number 2.
the Venezuela security
I don't
chief?
know. I know the number one, we just had a great conversation today, and she's a terrific person. I mean, she's somebody that we've worked with very well. Marco Rubio is dealing with her. I dealt with her this morning. We had a call, a long call. We discussed a lot of things, and I think we're getting along very well with Venezuela. Yes.
Mr. President, has a new Assistant Attorney General position dedicated to rooting out fraud.
Yeah, he's fantastic. The person is fantastic.
Who is it?
It's a he.
When are you
I will tell you maybe within minutes. I mean, I don't know if it's appropriate to say yet because we're going through a process, but we have chosen a person who's very tough, very smart, very fair.
You gave a speech yesterday in Michigan about how you've recalibrated the American economy to work for workers, U.S. auto factories. We've seen core inflation's completely tamed. You lowered the trade deficit to the lowest amount since 2009. American exports are growing, but we're also waiting on the Supreme Court case for the tariffs. Given the success that you've had in the first 12 months, what is at stake in this case, sir?
It's a little bit like whole milk. I can't believe we even have a case. This was a case started by very China-centric people and also anti-American people, frankly, people that don't want us to do well. Tariffs have helped us stop 8 wars. They've helped us get the best trade numbers we've ever had. They've helped us get $18 trillion brought into the country. And maybe above all else, they've given us tremendous national security. Just the threat of tariffs. You saw that just yesterday when I put tariffs on a certain country. We won't talk about that country, but you know who it is, based on the fact that if you do business with that country, you know, it's going to make them, it's going to bring them to the table a lot faster. So we have made hundreds of billions of dollars with tariffs. We have very little inflation. Think of it. Inflation's gone down and productivity, everything has gone up. We've never taken in money like we have. We've never had anywhere near $18 trillion invested in our country, neither has any other country. It's the biggest number by maybe 5 times. 5 times, not 5%, 5 times. Nobody's ever seen numbers like this. We have plants going up. You know, you mentioned I was in Michigan yesterday. I was at the Ford plant where they make the Ford 150. It's one of the original plants. It was from before World War I. It's a giant plant. That plant was probably going to be closed. And 2 years ago, they were doing very poorly. And now they just announced yesterday that they're going to go 24 hours around the clock. 3 shifts, which they rarely do. That's Ford, and Ford's having the best numbers they've ever had. General Motors having the best numbers they've ever had. Stellantis, which hasn't been here, is now investing billions, tens of billions of dollars on building in the country. We're building auto plants all over the country. We're building AI all over the country. We're leading China by a lot, and a lot of it has to do with tariffs. That would be a very disappointing decision. And especially since the people that are fighting me are people that want China to do well. And we're doing great against China. We're doing great against everybody. We're the hottest country anywhere in the world. As I say often, we're right now the hottest country anywhere in the world. And a year and a half ago, we were a dead country. Thank you very much, everybody.
Thank you, press. Let's go. Thank you. Thank you, press. Let's go. Thank you. Let's go.
All right, everybody, that's a wrap from the president in the Oval Office. A bit of a quick presser, although we kind of popped into it once it was already underway. I think what's key is some of the conversations or some of the questions he answered when it comes to Iran. He did mention that he is watching to see what the process is. When he was questioned about killings in Iran specifically, he said he was informed by sources on the other side and talked specifically about watching it after he said, here, forgive me as I'm kind of making sense of this. President Trump said very important sources on the other side told him that there would be no more killings or executions in Iran. Says he will watch and see what happens in Iran when asked about the military options in Iran. And obviously the world has been watching to see whether or not the U.S. gets involved more aggressively in this. We did see the price of crude oil after rallying earlier in today's session dipping back as a result of those comments.
Also some comments on tariffs. He kind of reiterated what he said yesterday about people and firms that have brought cases to the Supreme Court against the president and against the tariffs. He called them anti-American and China-centric. The president also saying that we have a good relationship with Denmark. We'll get briefed on Greenland meeting and had a call with Venezuela this morning. And finally, the president said he selected a fraud assistant attorney general.
Yeah, interesting. So a few other headlines, and obviously you could catch all of it on the Bloomberg terminal. Did you mention that he said he had a good call with Venezuela this morning? So forgive me, I was just kind of going through them. But again, finishing up there at the White House. Let's get you back to the markets, though, because we've only got just about 15 minutes to go until we wrap up the trade on this Wednesday. Following it for us all is, of course, Charlie Pellet.
Thank you very much. Indeed, we've got the Dow, the S&P, NASDAQ all trading lower. 14 minutes to go ahead of the closing bell here. S&P right now 69.13, down 50, drop there of 0.7%. Interesting day though for the S&P 500 index as we take you inside the Bloomberg. We have got 304 members of the S&P higher, 199 lower. So right now the S&P down 0.7. Dow lower by 0.2%. Red on the screen here. Tech stocks, big tech hit hard. We've got the NASDAQ 100 index down 1.2%. NASDAQ down 1.1%. A week-long rotation is seeing investors move from those richly priced tech names to more economically sensitive industries. NASDAQ 100, by the way, having its worst drop in a month. The Russell 2000 index of small cap shares up 0.6%. 10-year at 4.13%, with the 2-year 3.51%. Gold up 1%, 46.30 the ounce. Silver, what a story there, surging 7%, 93.08, a record for silver, while West Texas Intermediate crude 59.8 a barrel, down now by 2.2%. Recapping, stocks higher, S&P, stocks lower, I should say, S&P down 0.7%, but to be clear, we've got roughly 300 S&P members higher, 199 members lower. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Daddy, can I drive?
Yeah, sure, why not?
Do I look like I drive a minivan?
Shut up and drive.
Don't drive angry. Don't drive angry.
I'll drive. Shotgun.
This is the drive to the close.
If you had access to a car like this, would you take it back right away?
On Bloomberg Radio.
It is Bloomberg Business Week Daily. That is Carol Massar. I'm Tim Stenovec.
What were you looking at?
It's almost time to say TikTok.
Oh, is that what you're going to say? You're
Yeah.
just checking out the clock?
Just checking out the clock up there.
You made a funny face.
Well, I need to get new glasses, I think.
Me
is
too.
What it comes down to.
What time
And also,
is it? No,
you know,
I
we're creatures of habit.
Yeah.
So, you know, if things
old
aren't
student.
exactly at the right time, thanks to like maybe we go live to the president and we go what's called off the clock. This is just a little behind the scenes for everybody.
No, you get thrown
Things-
like,
you get
where
thrown
are
off
we?
a little bit,
Like,
yeah.
where are we in the show?
Yeah, which means I'm like, why are we just about 10 minutes away from the close of equity trading? Because that's where we are right now.
We are indeed. And folks, we're looking at a market that is down across the board in terms of the major market averages. So that means, as you just heard from Charlie, down about 1.3% on the NASDAQ 100, down about 0.75 percentage point on the S&P 500. And I'm looking at information technology down as a whole 1.7% in the S&P 500. So that's certainly among the biggest drags on the index. You've got consumer discretionary down about 2%. I'm looking at the S&P 500, the IMAP function on the Bloomberg. So a fair amount of red, but that doesn't mean everything is down. Energy's up almost 2% as a whole.
I want to bring in Adrienne Yamaki. She's founder and managing partner of Strategic Wealth Capital. The firm has about $230 million in assets under management. She joins us from San Francisco. Adrienne, good to have you on the program. I've wanted to talk to you over the last couple of weeks because you're based in California. You work with some high net worth individuals, no billionaires, just given, you know, the AUM that you have right now. But we're seeing this idea of a wealth tax being hit around in California, and it's unclear what exactly is going to happen. But Biz Carson and Dylan Sloan, a couple of our team members out in California, reported earlier this month that at least half a dozen billionaires have left California before the new year. Their exodus could soon be followed by more than a dozen others in the face of a proposed 5% tax on their wealth. That's according to financial advisors to the rich. How are you looking at this as somebody who does work with with individuals with money, you know, not necessarily billionaires, but individuals with money. How are you looking at proposed legislation like this?
So one of the that's such a good, it's really a hot topic right now. So a lot of our clients have quite a lot of wealth in properties, buildings. A lot of them have concentrated stock with the company. So the amount that we directly manage is a pretty small percentage of their wealth, but it's very hard to tax wealth as opposed to income. Or effectively capital gains. So when you sell something, because if you still own it, the question is, first of all, when do you take the snapshot? What is retroactive? What isn't? The record keeping and the cost for the IRS, for example, to monitor is very high. But if you just step back and think about, are they taxing the right segment? I don't think so. It's a very mobile segment. Individuals with that level of wealth can move very, very easily. And I don't feel like that's the right, that's the right thing to tax. Plus, it's extremely impractical too.
All right, so what do you do with the wealthy in terms of taxing? Because I think, it's interesting. I feel like over the years I've had conversations with some really wealthy individuals, and they're kind of shocked that something hasn't been done already.
What do you mean?
That there isn't some kind of greater tax on their wealth, and they're ready to do it. They're like, it's not going to hurt them that much.
There is that group, Patriotic Millionaires, that has been outspoken about this for years, where they're like, hey, we are wealthy people who've made a lot of money, and we don't think we pay our fair share.
And I don't even know that this individual that I spoke to, or at least one of them, was a patriotic millionaire, but just said, I get it. Like, let's give back a little bit more. So what is the right mechanism in your view? Or that the folks that you maybe work with would say, okay, I get it. Let's do this. This would make sense.
So when you say, no, this is such a great topic. So when you say give back, in terms of taxes or in terms of, for example, donating directly to nonprofits, to charities?
Taxes. I agree that there's a lot of wealth and wealthy individuals who do incredible things in terms of philanthropy. No, I'm talking about just taxes.
Like how to manage them, or are you talking more about the people with whom you've spoke who do feel like they should be taxed more?
Correct.
Why don't I answer? So we focus quite a lot on taxes.
Yeah.
I tend to work with C-level, EVP level, New York, DC, San Francisco, and just a few across the country. Very, very, very high income. They tend to have several million in income. So one thing most of my clients do, so if the question for them is, for example, for every million that I earn, 37% of it goes to the Fed, maybe another 10 to New York, they would rather select the schools, the charities, the churches, they'd rather have control over it, because for them, it's not a matter of using it for themselves. They can't consume that. It's either going to go to tax or to charities. So I have a lot of clients who use donor advised funds, a couple who have foundations, and they give it instead of paying the tax on it. So that's actually one way that we manage, a big part of their taxes is whom they give it to. And then of course there's gifting to children, etc. But donating is a big piece of it.
But why not have some kind of tax policy where I know what everybody says. Well, they're already at a high rate, but it's not just about taxing income. It's about taxing wealth. And I think that's where it gets a little tricky, as you say. How do you figure it out? But I'm sure we could figure it out if we really wanted to. And so that there was more of a give back on that regard among the wealthy.
So we do tax wealth in situations where there's a very discrete time frame. So for example, when we die, it's a one-time thing, and that's effectively what estate taxes do. So it's the period, you usually can value it between date of death, 6 months after, more or less. But effectively, exactly to your point, there are situations which make it easier to be able to tax wealth or wealth transfer. The tricky part is, for example, if someone has a business worth $100 million and nothing changes. Do you tax the revenue? Do you tax the profits? Do you tax the real estate? It does become a lot more complicated when the time period is in flux and there's no signal of something sold, something has ended, something has started. So it's a pretty tough thing to do. And, it was a good question that Tim had asked about mobility. If it's easy to move and you can have a big change in the amount you're taxed, most people will choose to do that.
It's an interesting topic, and a lot of states are trying to figure this out. I know that it's all obviously very political, but it's something that I know in California, where you are based, there's going to be a lot of attention on it this year. I think too the concern that a lot of people have expressed who are anti this tax is that you've already driven away so much wealth as a result of the proposal that's missed tax revenue, regardless of what ends up happening. So we'll see. We'll see what happens there. Adrian, we have a couple minutes left, and I do want to hit markets with you. This could be the first double day or back-to-back days of declines in the S&P 500 so far in 2026. Are the markets? Is it? Should we even be looking for signals right now? We know markets go up, we know markets go down, but at the same time, as Carol said, it does seem like we're actually starting to hear pushback against what the president has been proposing to these companies and for these companies.
Yep, absolutely. By the way, I really like Jay Powell's the short video that he recorded the other day. I think it was very clear about the importance of maintaining independence. So one thing that markets are certainly jittery about right now is just the uncertainty. So it's a funny market because, and it just came out on the 8th, that consumer sentiment is low. It's lower than a year ago. It keeps trending lower, but I have to remind myself sometimes as well, the economy is actually doing very, very well. Unemployment is still low. Inflation, a lot of the tariffs, again, haven't been built in yet. But inflation is actually reasonable, and then interest rates are coming down. So if we look at how we are actually performing versus how we feel about it, there's a pretty big disconnect. A lot of it's political. Like I said, a lot of my executives are in West Coast, East Coast. That definitely, and remember, investing at the end of the day, it's earnings, but it's how we feel about it. And I think that risk perception, we have to really pay attention to it and not discount it too much.
Adrian Yamaki, thank you so much over at Strategic Wealth Capital. Do not go anywhere. Tim and I heading over to our TV colleagues. The closing bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside David Gura, here to take you through to the closing bells with the global simulcast. It starts right now. Carol Masser and Tim Stenovic in the radio room. Katie Greifeld on assignment today. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. Carol Masser, you have a grin on your face. I haven't seen you in days. I don't know where you've been. But we talk about a market that's on the back foot today for a second straight day. And I think really trying to get their handle around economic conditions, corporate earnings, and of course, whatever the heck is going on in Washington these days.
Yeah, right. Taking your cues from so many different places makes it really hard to figure out strategy. Having said that, even though the S&P 500 is down for a second day, you dig inside the index and you've got more names, more than 300, actually gaining ground on this Wednesday. So it's good to dig a little bit deeper to get a little bit more of what's going on in terms of investors' thinking.
It does look like the S&P 500 will close down for a second consecutive day, and if that does indeed happen in the next, 40 seconds, this will be the first.
Good call, Tim.
Sorry, excuse me. Go ahead. What did you say?
Nothing. Keep going.
Okay, all right.
Technical difficulties.
Yeah.
Why do
David's like, what did I get
David
myself?
has no idea.
This is to answer the question, David. This is what you got yourself into.
This is what happens on weekdays.
This is what happens.
For those who know, David Gura anchors our weekend line here.
Okay,
he has no idea what goes on Monday through Friday.
I just want to point out that year to date, we're still up more than 1% on the S&P, and we're only 14 days into this year.
Absolutely. Though we are getting a meaningful pullback here today. You add that to some of the softness that we saw yesterday, and it is raising a lot of questions about exactly where investor sentiment is. We're going to walk you through these numbers because it is a somewhat complex day on Wall Street. You take a look at the Dow Jones Industrial Average. We're just going to kind of call it unchanged on the day. It is down in the red, down about 40 points, but less than 0.1% on the day. We saw a more meaningful drop lower on the S&P 500, which shed more than 30 points, or about 0.5% on the day. The NASDAQ Composite down more than 200 points or 1% on the day, a similar percentage drop for the NASDAQ 100. But you go into the cyclical space. Dow Transports unchanged on the day. S&P equal weight up 0.4%. S&P 400 mid-caps up 0.1%. And the Russell 2000 adding about 18 points or 0.7%. A ninth straight day of outperformance relative to the S&P 500, the longest streak of outperformance, Carol Massar, since 1990.
Wow.
I wasn't alive then, but I'm sure it was exciting.
1990? Yeah. What were you like, 30 already? 40? I don't know, something like that. Hey, let's go inside. I love how you went. I love how you went deeper, because I do think you can't just look at the major market averages, because there's a lot more going on. Having said that, dig inside the S&P 500, David. You've got 318 names actually gaining ground on this Wednesday, 184 lower, 1 unchanged.
Let's pull up the IMAP function on the IMAP function here on the terminal and look at that on a sector-by-sector basis. And the story here today has been one of a rotation. Do we have one that has begun in earnest and has some staying power? And you just look at those sectors, sort of what the decliners are. Information technology, one of the biggest decliners. Energy, consumer staples, real estate. So I think adding fuel to this fire, this sense that maybe there is this rotation underway. Of course, there is this. You got to see if it sticks. That's the problem. We'll see what happens here tomorrow.
Yeah, exactly. All right, and certainly a lot coming out, investors. All right, let's get to some of the individual gainers, if I may, in the green. See, look at that outperformance today. You got Dow, the number 2 gainer in the S&P 500. Lyondell, ticker LYB. That's the number 1. I think Dow is the number 2 gainer in the S&P 500. This is coming after Citi analyst Patrick Cunningham removed the 90-day downside catalyst watch on the stocks as polyethylene prices improve and ethane prices fall, helping the firm's integrated margins. You also had U.S. chemical stocks rising as higher oil prices were giving gas-based producers an advantage, and analysts see upside for U.S. chemicals and fertilizer firms. So you have that play, and that's maybe some of the story. So Dow up about 6.5%, Lyondell up about 6.8%. Some outperformance. And then flip it on over to Mosaic, ticker MOS. It too was a top gainer in the S&P 500. Morgan Stanley analyst Nigel Daly maintains an equal weight on the stock, raises the price target from 33 to 35, stock closing at just under $28 a share. So that's certainly at play. And then I just want to mention Strategy, ticker MSTR, top in the NASDAQ 100. Bazinga Newswire noting that one of the strategy directors, Carl Ricketson, bought about 5,000 shares of the company for the first time in 3.5 years, and that's after the stock crashed nearly 70% from its November peak. So that purchase by this director marking a reversal from his previous pattern of selling shares, having filed 19 separate SEC forms showing only stock sales over the past 3.5 years. So insider buying, right, always often seen as a positive sign. So we'll see. Time will tell. Because
I just want to add one honorable mention in there, Carol, and that's with Critical Metals, which was up more than 30% here on the day. A small cap company, but one that could potentially benefit from whatever the heck is going on between the U.S. and Greenland.
All right, let's get to some of the decliners. Now, I want to start with the banks. Bank of America, Wells Fargo, and Citigroup all falling. Bank of America down close to 4%. Wells Fargo down 4.6%. Citigroup down 3.3%. We're going to talk about this with Kat Doherty in just a second, but all of these banks reported earlier today. We heard different things from all of them. Citi's Jane Fraser saying that telling employees the bar is raised. She signaled further job cuts to come. Bank of America shares declined amid concerns about expenses, even though equity traders posted their best fourth quarter ever. And Wells Fargo missed analyst profit estimates as severance costs drove up expenses. Also taking a look at tariff-related stocks. Those today
That's just
slid.
one decliner?
That's just one. This is all for you, Carol.
Jeez.
Finley said this is okay, our producer.
Actually, Finley said.
I checked with her.
Actually, Finley said Tim next with his 5 million decliners.
Okay, that's a win. You know, when a lot of stocks are down, I got to use it to my advantage.
All right.
Mattel, Hasbro, Lululemon all took a hit today. These, after the Supreme Court did not issue an opinion on the legality of those IEEPA tariffs. We'll see when we hear from the Supreme Court next if we do get some clarity there. We're going to be speaking to Rick Woldenberg over at Learning Resources. He's actually one of the CEOs who's bringing this lawsuit to the Supreme Court. He's going to join us in our 4 o'clock hour. And finally, look at hotels, resorts, and cruise lines today taking a hit. This is the S&P 1500 hotels, resorts, and cruise lines index down 1.41%. We could also say home building home builders also fell today. This after the U.S. State Department gears up to suspend processing visas for people from dozens of countries, including Brazil and Nigeria.
And just add honorable mention to that, really the big.
I did every stock that was lower today, Romain. There are no honorable mentions.
You did not, actually. You actually missed the software stocks. We saw a big downdraft in a lot of those names like AppLove and Intuit, DocuSign, and quite a few others, particularly the application software stocks. Keep an eye on that space here as investors do continue that rotation, and keep an eye on what's been going on in the bond market. We did see a more meaningful move in Treasury yields on the back of that economic data, and it was to the downside. A 4 basis point drop on the long end of the curve. Your 30-year yield down 4 basis points. Similar move for your 10-year yield. Your 2-year yield down about 2 basis points. And we should point out the move on the 10-year and the 30-year down, the most meaningful drop that we've seen on a one-day basis in at least about 2 months.
All right, let's get to some stories that definitely jumped up on our radar. And this one has to do with the former New York City Mayor Eric Adams promoting a new crypto asset. It's called NYC Token. Portion of the proceeds going to fight anti-Semitism and educate children about the blockchain, Tim.
People are not happy, though, because the value of the token surged as high as 58 cents. Then it crashed under 10 cents. Crypto market observers drawing parallels to a, quote, rug pull. This was kind of a thing that happened with the meme coins in the past. You remember Eric Adams wanted to be the first crypto mayor.
Yes.
Did accept a couple of his first paychecks. In crypto.
Well, he was the first on a lot of things as mayor, not always necessarily good things. I do just want to point out, because I was looking at this. At one point, we talked about a market cap for this particular coin, which is $NYC, $600 million. It came in at $100 million. As of right now, at least based on the pricing on CoinMarketCap, $10 million. Now, you're the crypto expert, Tim Stenovec. I believe you host a show called Crypto.
Tuesdays at noon.
Something, right? Yeah. Is it Crypto IRL?
No, this is Bloomberg Crypto.
Oh, sorry. Is that too soon?
Sorry?
All right, we're going to move on here because another big story that we've been keeping an eye on, actually, in all seriousness, though, I mean, in addition to the rug pulls potentially going on in the crypto space, there's been a lot of concern about the health of the consumer and really the health of retail. We just learned that Saks, the company overseeing Saks Fifth Avenue, Bergdorf Goodman, and Neiman Marcus, filing for bankruptcy. And this is raising a lot of questions here, A, about whether somebody will actually buy them out of bankruptcy, but also just really about whether, like, these types of companies, particularly those with the big brick and mortar presence, can still survive.
I lean on the old cliche from Ernest Hemingway, how do you go bankrupt gradually and then suddenly? And that's very much the story here, Romain. Looking at how this company was doing, there was a lot of positive talk, a lot of infusion of cash earlier this year. That has changed with this Chapter 11 filing for Saks. They are optimistic, however, that later this year they will get out of.
Didn't they just buy Neiman Marcus a year ago?
Yeah, they had the big roll-up a year ago. They brought in Bergdorf, Neiman. They were supposed to be kind of like, Voltron together. They were going to be stronger than apart.
They issued a lot of
here we are a year later.
And I think they're counting on Neiman's former CEO to get them through this. So it's all in the family.
Yeah.
All I know is...
All right, we got to let you guys go because Tim's having trouble hearing. There's something going on with Carol's hair today that's throwing me off. I don't know what's happening over there.
It's great to see Carol.
Yeah.
David, are you going to come back tomorrow, do you think?
If asked, I'll serve. I believe that
hey, David,
Katie Greifel will be back.
You can come back.
Thank you very much.
That other guy, not so much.
We've just met, he and I.
All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We do call it the closing bell without Romain Bostic. No, with Romain Bostic. He and David, of course, continuing there on the close on Bloomberg TV. Tim and I continuing right here on Bloomberg Business Week Daily. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Sometimes that is like, do you ever have like a family gathering?
I guess I got to turn the volume up in my earpiece. I think what happens is Romain likes to kind of like mumble under his breath.
He definitely has a technique.
When he does the burns to me.
He does the burns.
Yeah.
We do love him. And like he loves us, and that's part of the fun.
It's all love.
But it's every once in a while you're like, hey. Well, it's like those family gatherings with like your favorite aunt and uncle, and then they're like, did you get a haircut? Like
Speaking of love, not so much love for the banks that reported today.
No, nor J.P. Morgan, right, when they reported yesterday.
Yeah, Bank of America fell today 3.8%. Wells Fargo down 4.6%. Citigroup down 3.3% today. Here are just some headlines. Citi CEO warns of more job cuts, calls time on old bad habits. B of A tops estimates on trading beat, shares hurt by cost concern. Wells Fargo shares slump most in 6 months after earnings miss. You see the stocks there if you're watching us on YouTube or Bloomberg Originals. Kat Doherty is a Bloomberg News finance reporter. She joins us here in the Bloomberg Interactive Broker Studio. So when we look at these three banks that reported today, and we'll talk about the two that are reporting tomorrow, and then JP Morgan reporting yesterday, is there any commonality or thread, at least to the negative stock reaction that we can draw, or are all of these idiosyncratic?
Yes, it's all about the future. It's not so much about the figures that they reported today. Yes, those were under scrutiny. Yes, a lot of the numbers that we saw were above expectations. So the negative reaction that you're seeing is about what is going to happen in 2026. So some of the executives gave a little bit more color on the various media and earnings calls today with analysts to discuss one of the things that was really under the microscope: expenses, costs. Are these firms able to keep a lid on their expenses as they're having to pay for talent, compensation, also investments in things like AI, their technology? They're in a hard place because you don't want to fall behind. You don't want to have your technology go to the wayside, in which case you can't keep up with your competitors. At the same time, every earnings call and in 2026, that number that they're trying to abide by, that expense guideline, and the details that they're given, they're having to walk that fine line. So that's really some of the scrutiny that you're seeing here.
God, they're always having to pay for expensive talent. Like, I could go back 5 years, 10 years, and we'd be talking this story. And I think about Jamie Dimon, when was it, like 10 or 15 years ago, on some panel saying, you know, the biggest thing I think about or I was worried about is cybersecurity, but it just reminded us of the amount of spend that they are doing on technology at these firms. So what is it about this environment that all of a sudden, is it just that these stocks ran up so much? Is it valuation? And so still a good business, but you guys ran up so much.
I do think the broader context is that the banks have been on a tear. They have been some of the best performing as a sector. The shares have really taken off. 2025 was a very positive story when you just look at their share performances. Now, I think that the sell-off that you're seeing this week is a pullback from that. There was a lot of exuberance, and then you're also seeing a lot of pressure from the various announcements that are coming out from the Trump administration. You've probably seen the headlines asking for a 10% cap on credit card.
We talked about this earlier.
Yes.
Who would this hit the most?
So think about the biggest consumer banks, and the biggest consumer banks that have the biggest credit card businesses: Citi, B of A, JP Morgan with Chase.
All of them.
All of them, but with a caveat. So we've seen Goldman that has exited out of their consumer business.
That was in the Apple thing.
They have given the Apple card to JP Morgan.
How important is this business, though? Give us an idea. These are massive banks, right? And they've got investment banking, they've got trading. How important is the credit card business? Like, can you quantify or just give us an idea?
It's very important. I mean, if you think about the rate that they're asking, it's half of the average that's out there in the industry. You're talking 20 to 22% is kind of the baseline across the board. So a 10% is going to cut into their profits in that business. When you think about Bank of America, for example, they are catering to and have really since the financial crisis, the average FICO score that they're accepting in terms of who they're lending to on the consumer front, they're averaging in the 600 FICO scores. Today, Brian Moynihan, the CEO, he spoke a little bit about what could happen if that 10% cap was put in place. He is estimating just right off the bat that could move to the 700. So if you think about the various customers that they're catering to, the companies are going to have to, if that goes into place, that cap, rethink their business model.
Yeah, and if people hadn't joined us in our 3 o'clock hour, we played some sound from that earlier today. He basically said if you bring the caps down, you're going to constrict credit, meaning less people will get credit cards. The balance available on those credit cards will also be restricted.